Hello friends. If you are a completely new investor, you must be thinking, what is this stock market? How it functions? And what is the emphasis of stock market in our Indian economy? What is the relation between the two? And as a retail investor, how you can participate? So today I'm going to talk in detail about that. So stay till then. Guys, I welcome everyone. My name is C.A. Tapan Doshi and today we are going to talk in detail about Indian stock market. So guys, without wasting any time, let us start. So guys, first of all, Indian stock market is directly correlated with Indian economy. Let me show you how. See, basically Indian economy, if you see Indian economy is nothing but a cluster of goods and services, whatever produced in India and supplied and every day, and whatever revenue which India government, even the citizen of India is earning, correct? So it's directly related to Indian economy. And Indian economy, if it grows, it will directly impact Indian stock market. I tell you how. See, basically understand, Indian stock market is nothing but a cluster of almost 7,500 companies which are listed in Indian stock exchange, which is Bombay Stock Exchange and National Stock Exchange. Now, suppose if Indian economy grows, of course, the profitability of this company may grow. Now, you may say that Tapan, it's not that all the companies operate in India also, and but they also operate in other countries, correct? So it's a combination of India and global. But yes, small part of it, you can say out of India, there is an export or import, whatever is happening with other countries. All these companies are having the trade with other countries, but understand one thing, guys. Most of the revenue is being earned through Indian domestic economy only. Correct. So through this domestic consumption, these guys are earning income, and if the profitability of these companies may go up, that is 7,500 companies. Of course, Indian economy will go up. Correct. So at the end of the day, both are correlated. So over there, if you see our Sensex, that is Bombay Stock Exchange, started in 1979 at 100 points. Okay, 1979 it started at 100 points. Now it is 2022 and we reach almost 60,000 index. Correct? So that is a thing. This is what it shows, that over the years, Indian market has grown. But why Indian market has grown? Indian stock market has grown because Indian economy is going up. Correct. So that is a direct correlation with Indian economy. So of course, if the next decade, which has been said that currently we are the fifth largest economy in the world, correct? And it has been said that by almost maybe around 2030, and that is an forecast that we may be the third largest economy. So that it shows that yes, India has a quite a potential to grow from here also. And that is why as an individual investor, it makes lot of sense that to invest in Indian economy, and that how you can invest through Indian stock market. So Indian stock market is a complete barometer of Indian economy, and that is why one should invest. Now you may say, okay, I understood we should invest in India, but how the stock market functions and why stock market is needed. So let us talk in detail about that. Now talking about why we need Indian stock market. First of all, understand one thing. A businessman, when he comes into market, okay, first of all, normally when he starts a business, it starts with his own capital. Correct? And that may be 10 lakh, 20 lakh, 1 crore, 5 crore, whatever it is. Now it starts with the own capital. But when the individual start expanding, now it requires more capital. Okay, now for that, then he may goes to bank, okay, and he may take a corporate loan and everything, which may be around 12% or 14%, whatever it is, whatever the interest rate is, it may borrow the bank. But whatever this fund which is collected from the bank, he has to repay that bank. Correct. So that is a burden on the businessman. However, he says, no, boss, I cannot, I don't want to repay it, and I want to basically end shareholder. Okay. So normally it may happen that businessman out of 100% equity. Now, what is 100% equity? So any businessman, when he start his own business, if he start in a solo, then 100% stake of the business is with him. And if it starts with the partnership, then they may distribute. Some may have 40%, some may have 30. In similar way, there's an equity distributed. Now it may happen that they may sell that equity to an angel investor. Now, who are the angel investor? Angel investor are no one but who invest in a particular company before the IPO comes. So they get a stake out of it, and they may come at a lower price. But the risk is they may lose that principal also if the company, or sorry, if the business does not take off. Correct. So that is the thing. Now, suppose out of, for example, let us take this business is nothing but ABC company. Okay, ABC company. Now we cannot say company because no, at the end of the still it is not listed. But now ABC form it is there. Okay, ABC form has a 100%. ABC firm has a 100% equity. Now, out of that, if a angel investor comes, they may sell, ABC may sell around, what you can say, just a minute. So, if an angel investor may come, then ABC may sell 20% of that stake to angel investor. For that, they may get a good amount, which they don't have to repay to the angel investor. Correct? So, that is the thing. So, now ABC is left with only 80%. So after the, now this angel investor may be many. Okay, 20% I have just taken a combined figure. Now after some time they may feel that no, we need more capital and we need a no, we want to go public. So at that time, now as I told that currently ABC has 80% because 20% is the angel investor. So out of this, then out of 80%, they may say that okay, let me go and bring an IPO. Okay, so what is IPO? IPO is nothing but initial public offer. So initial public offer means they want to list in the stock exchange. So out of 80%, they may say, okay, let us keep 65 with us, that is promoter. Okay, and 15% to retail public and retail investor and institution, whoever it is. So basically, it is like a IPO. So basically, the 15% is nothing but a IPO. So they may come in the market with 15% of the IPO out of total equity. So as you can see here, so now here 20% is angel investor, then another 65% is promoter, and rest 15% is the IPO. Okay, so this IPO may be bought by mutual fund, retail investor. Again, this in 15% also they have to classify how much will be for the institution, how much will be for the NRI, how much will be for the retail investor. So this is the way they have to list a company. Okay, now when they are bringing their IPO, they have to follow the SEBI guidelines. Now, based on SEBI guidelines, they have to list and issue. Okay. So now you may say, okay, Tapan, I got it. Now they are listing a company. Now at what face value? So normally they may come at different face value. Normally any IPO comes with a 10. What is face value? Face value is a 10 rupees share. Okay, per share. Okay, but when they come in the market, they come with a premium. Because understand one thing, when a company is coming into the market, it is not that they have started a business, they are coming into the market. Even the SEBI will not allow that. They have a background of 5 years, 10 years, or 15 years of operation, and based on that, they must have earned lot of money and goodwill and everything. Correct. And that's why when they come in the market, they come with a premium. Okay, so suppose a 10 rupees premium, they may come at a 100 rupees IPO. Okay, so what is 100 minus 10? 100 minus 10 is nothing, 90 rupees is premium. This is the extra premium they are charging from the new investor, that is the institutional retail investor, whatever it is, when they are listing in the market. Because understand, they have already built a business. So they will ask, कि भाई मैं तो ज़्यादा पैसा मांगूंगा. It's not that I'll come at a 10 rupees. Okay, you have to pay more because you are coming in the established business. So that is the thing. They may ask for a better premium, and that is the reason they will list with a premium. Now let us understand. Once they list in a company, okay, so they bring an IPO, and you know that IPO there is a issue date, and once it is been subscribed, so once it is 100% subscribed, okay, then it is listed in the market. Okay, now what was the share price? Share price was 100 rupees. Now it may list at a 90 rupees also, or 120 also, or 200 also. Correct. That depends on the demand and supply of the share. So that is the thing. You have to understand that, see, stock market is the place. Stock market is the place where the businesses are changing hands. See, one of the main funda and one of the main reason why stock market exists. Stock market exists so that a businessman come with its own business list in the stock exchange. They may invite a new investor to be a part of their own business and be a part of their own growth story. Correct. And that is why stock exchanges are right. If a businessman want to exit from the business also, he may go to a stock exchange, he may sell all his shares also. So that is why stock exchange is very important. So in a way, you can consider that stock exchange is a place where the business ownership changes hands from investor to investor. And that is the why reason it is the best place to earn a big money. Because see, you have to think that when you are investing in a stock market, okay, in a stock exchange, in a particular stock, then think it that you are investing in a business. That is very much important. See, why business? Because if the business where you are, suppose for example, let me tell you, suppose you are invested in a HDFC bank. Okay, so stock that share you have bought. Now indirectly you have bought the HDFC bank business. Okay, it may be 10 shares, 20 shares, or 1,000 shares. That is irrelevant. But indirectly you are becoming a shareholder of a company. You are becoming a business owner of a company, and that's why you have a voting right, dividend right, everything you are getting. But along with these rights, that comes an risk also. Suppose the share price of HDFC Bank goes down, then you may lose also. And of course, if the HDFC Bank prices goes up, then you will earn. Why? Because you are directly taken a part as a business partner. So once, and again, it's like a passive income which will see, basically it is nothing but it is like a passive income which will work 24 by 7 for you. Okay. This passive income, basically, see, understand, whenever you are investing in an HDFC bank, do you go and ask that manager and boss, what are you doing? What is it tomorrow agenda and everything? Correct? You are not asking. They are working 24 by 7 for you, and whatever amount they, whatever profit they are earning, and indirectly through that, the share price of the company goes up. And because of increase in the profitability, your share value will go up. So please understand, once you are, it's like a passive income which is working 24 by 7 for you. And that's why it is so important to invest in Indian stock market in a good business, because this may create a big wealth. Over the years, if you see Indian stock market from 1979, to 2022, overall it has given more than 50% CAGR return. Okay. What is 50% CAGR return is nothing but compounded annual growth rate. So suppose you are invested, let me tell you what is the compounded annual growth rate. So suppose you are invested in a particular stock, okay, at 100 rupees, and get, and not stock, okay, any particular investment, you are getting a 10% interest rate on that. So it will be 110 at the year one. Now again, second year you are getting 10%. So it will be 11 rupees. So 110 plus 11 will be 121. Correct. So as a result, if you see that the interest also it is reinvested. And that is why it is so important that now it is getting compounding, and compounding is the eighth wonder of the world. Understand? And that is why this may all this investment in many stocks, and if turn out to be good, no, it can create a big wealth for you. And this stock market has given more than 15% CAGR over the years, which is one of the best asset class compared to gold, silver, or if you take real estate or any other investment. And that is why it is so important. Correct. Now understand, if you want to, even if we talk about HDFC Bank, no, HDFC Bank has given overall CAGR return of more than 22% in last 25 years. So this type of return they are giving. Asian Paints has given more than 25% CAGR in 25 years. Even Bajaj Finance. And that is why, understand, as a retail investor, you have to invest in this type of stock where you can create a big wealth. See, guys, I'm not able to cover all the concept in one go, but I'll try to cover as much as possible so you will able to understand stock market in a better way. Correct. So this is why invest in a better stock. So this is the way stock action you can buy and sell a stock. Now, as a retail investor, how you can buy and sell any stock. Correct. So for that, if you are a retail investor, you should have a three account. Okay. Well, first is of course you need a bank account. Second, you need a Demat account. And third, you need a trading account. So, and all these accounts are interlinked with each other. Okay, all these three are interlinked with each other. And as a result, no, you cannot open any account without all the three is open. And you have to normally open this account. You have to normally open this account with a broker. And it is a very simple process. It's not so tough. But once you open a broker account, this Demat account, you can start buying and selling of a stock. Now, see, if you want to understand how to do it and everything, the link is given. And if you want to open any account, link of Kotak Securities is given where 0% brokerage is there in any intraday and everything. Okay, so basically you can take a use of it. It's a unique proposition which is come in the market from Kotak Securities. So you can click the below link to open a Demat account if you want. That is there in the description. So that will help you. So that is the thing. Once you open an account with a broker, then you can start buying and selling of a stock. Of course, you have to buy and sell a good quality stock. Correct. So once you buy a good quality stock and you keep it for a long term, you may earn a very good amount. Now I'm not going to go into deep on DP and everything. For that, I will take another lecture and another video where I will going to talk about in detail about it. But today I'm going to just tell you what are the basics of Indian stock market and how you can enter in the market. Again, talking about Indian stock market. Now, Indian stock market has, as I told you, has more than 7,500 stock listed. Okay, and many stocks which have become 10 times, 100 times, even 1,000 times. Okay, and there is always an exchange of hands of that is ownership from one investor to another investor. Now, normally a stock exchange, Indian stock exchange, that is NSE and BSE, works around 9 a.m. to 3:30 p.m. Okay, in that 9 to 9:15 a.m. basically it's a pre-opening. Okay, so it's a pre-opening where you can list your prices and whether now it's a pre-opening means no all the earlier the closing whatever is there through that stock price is opening and these 15 minutes whatever trades are happening through that unique price a single price is determined which will be starting at 9:15 p.m. a.m. Okay, so real market start from 9:15. So 9:15 to 3:30 p.m. So this is how Indian stock market works and NSE and BSE. So this many hours you can trade and sell, buy and sell of all the shares, whatever you have. Again, whatever you buy and sell, it will be coming in your Demat account. Of course, the payment should be done from your bank account to the trading account. So basically, again, the DP will take care of exchange of hands from so ownership from one hand to another. So stock coming from bought from one investor, it will go to the another investor. So that normally happens in T+2 basis. Okay. So what is T+2? Today, suppose it is you have bought. Okay. So within next 2 days, you will get a delivery in your Demat account. So that is the thing. This is how normally it works. Correct. So guys, this was what I want to tell you about the market. Of course, this is the part one. I'll come up with the part two where we'll go in deep about Indian stock market in detail. It will be a series of episodes now that will help you to understand Indian stock market much more in detail. So hope you like this. And guys, if you like this, just like this video and also subscribe to my channel. Correct. And also I am conducting lot many webinars and masterclass. And if you want to understand how to invest in stock market in a much better way, okay, and how to select a multi-bagger stock and everything, then a link is given, a free link of basically a masterclass which I normally do every week, where I will make you understand how to do a long-term investing, how to select a stock, multi-bagger stock, how to design your portfolio, what type of mindset you should give. So you can just click below link and you can enter in that masterclass free of charge. Correct. So guys, thank you very much and stay tuned for the next episode where I'm going to talk about how to trade in Indian stock market. And as a beginner, it will be much more valuable to you. Okay, so see you soon. Thank you.